Dear students, welcome you all to LMS Digital Learning Classes, session number 38. In this session, we will solve a problem on Memorandum Joint Venture account. Under Memorandum Joint Venture account method, each co-venture will record only the transactions which are relating to joint venture which are directly concerned with him. The two main important accounts that are prepared under this method are Memorandum Joint Venture account and Joint Venture account with co-venture name. So you can see a problem here. So this problem is on Memorandum Joint Venture account. Pramod and Manoj entered into joint venture involving the buying and selling of old railway materials with an agreement to share profits or loss equally. The amount is in rupees hundreds. The cost of the materials purchased was rupees 30,000, which is paid by Pramod, who drew a bill of rupees 20,000 on Manoj at 3 months period. The bill was discounted by Pramod at cost of rupees 160. The transactions related to the ventures are as follows. Pramod paid rupees 200 for carriage, rupees 600 for commission on sale and rupees 100 for travelling expenses. So this is the expenditures incurred by Pramod. The next, Manoj paid rupees 80 for travelling expenses and 150 for sundry expenses. So these are the expenditures of Manoj. The next, sales made by Pramod amounted to rupees 21,400 less allowance for faulty goods rupees 400. Next, sales made by Manoj were rupees 15,000. Both the co-ventures sales were given. The remaining goods were retained by Pramod and Manoj for their private use. Those were charged to them at as rupees 1,600 and 2,400 respectively. Pramod was credited with sum of rupees 300 to cover the cost of warehousing and insurance. The expenses in connection with discounting to the bill were treated as the charge against venture. Prepare ledger account in the books of both the parties and also Memorandum Joint Venture account. Now we'll see a Memorandum Joint Venture account for the same problem. So you can see here Memorandum Joint Venture account. On the debit side we are recording all the transactions. To materials 30,000, to discount on bill rupees 160, to carriage expenses 200, to commission 600, to travelling expenses 100 plus 80 that is 180, to sundry expenses 120, to warehousing expenses 300. On the credit side you can see the sales made by both the ventures, 21,000 of Pramod and 15,000 of Manoj, total 36,000. Then next entry is the stock taken over by the co-ventures. Pramod has taken the goods worth rupees 1,600 and Manoj has taken goods worth rupees 2,400. Upon closing this Memorandum Joint Venture account, so there is a credit balance of rupees 8,440 rupees, which is divided among both the co-ventures equally. Pramod 4,220 rupees and Manoj 4,220 rupees. Next, we will see how these transactions are recorded in the books of Pramod. In the books of Pramod, joint venture account with Manoj account. On the debit side, you can see the expenditures incurred by Pramod are recorded directly by bank account. So materials 30,000, to discount on bill 160 rupees, to bank account. So these are the four expenditures incurred by Pramod. Carriage expenses 200, commission 600, travelling expenses 100 and warehousing 300. So total expenditure is 1,200. Next, to profit and loss account 4,220. So this is the profit on Memorandum Joint Venture account. On the credit side you can see by bank account. So this is the sales made by Pramod, 21,000. By stock taken over 1,600. So total 35,580 rupees. So there is a debit balance of 12,980 rupees which is carried down. When same transactions are recorded in the books of Manoj, joint venture with Pramod account. So here we record only the transactions of Manoj. On the debit side you can see bank account. So this is the traveling expenses incurred by Manoj, rupees 80. To bank account sundry expenses, rupees 120. To profit and loss account, rupees 4,220. So this is the profit on memorandum joint venture account. On the credit side you can see the sales made by Manoj by bank account 15,000 rupees. Then he has also taken the stock worth rupees 2,400. So the entry is by stock taken account 2,400. Upon closing this account we have a debit balance of credit balance of rupees 12,980. So that is two balance carried down. I hope you are clear with the memorandum joint venture accounting and you have understood the problems on memorandum joint venture account. Thank you so much.